Over the last 3 years as a trader, I've been able to consistently flip small accounts to multiple 4, 5, or even 6 figures. And in this video, I'm going to be showing you guys the exact system and strategy, starting from which time frame I look at all the way to how much I risk per trade. Let's get right into it. Now, first, I want to start out by discussing the strategy. And the strategy is going to be realistically about 40% of this. It's going to be very important, but it's not the most important thing. Now, the key thing that I want you guys to understand about the strategy is it's not going to set up every single day. You might get 1 or 2 trades, or maybe even 0 in a week. But it's all about waiting for the market. We want to allow the markets to show us their hand and actually give us hints as to what's going to happen instead of trying to constantly chase it and figure out what's going to happen. The best way to preserve your capital and really scale it is by manipulating the odds. And that's exactly what this strategy is going to allow us to do. So let's actually look at this on a chart. Now, the first thing about this strategy is we want to identify, are we actually trading in the same direction as the trend? So imagine that your trend is moving upwards. What we want to make sure is we're not getting in on the downward movement across an uptrend, right? We want to make sure that we're always finding the best positions, meaning that we're getting in on the upward movements on uptrends. And if price is going to be trending downwards, we want to be actually capitalizing on the downward movements. Very simple. Now, up next, we want to focus on our high time frame supply zones. Now, the most important thing for us is going to be the daily time frame. Now, it doesn't mean that all my entries and stop losses will be on the daily, but it means that my analysis has to be built on the daily in order to give me the biggest chance at winning my trade. You never want to have a lower time frame order go against the higher time frame order. The best possible way for us to do this is to have our higher time frames in alignment. So what you want to identify is areas on the daily time frame where price actually gives us a very big movement, and these are going to be considered our supply zones. And what you're going to notice in these supply zones is that markets tend to pull back into these supply zones or demand zones if we're looking at a bullish order, but price actually tends to pull back to these areas and then continue its structure. So in this scenario, this would be a supply zone on the daily, this would be a supply zone on the daily, and you would just see price pulling back into them before continuing its move. And the same thing applies for if it's a bullish order, right? You're going to see price pull back into these demand zones and then continue structure upwards. So you would have a demand zone here, you would have a demand zone here, and that's what you would start to see prices pulling back into. And these are to be identified by very specific candlesticks. Now, I talk about this a lot, but obviously we're going to show you guys here again. We have certain rules when it comes to supply and demand. And so when we have demand zones, and remember, demand is going to be for bullish orders, we're going to identify our demand zone by the lowest candlestick before the major push up. And when it comes to selecting that candlestick and how we draw it, we have the simple rule. If the lowest candlestick is bullish, you're going to be drawing it from wick to wick like this. And if the lowest candlestick is bearish, you're going to be drawing it from wick low to body high. Very simple. And for supply zones, we have the opposite set of rules, where if our highest candlestick is bullish, it will be from wick high to body low. And if the highest candlestick is bearish, it will be from wick to wick. Very simple, but very important that we follow this exact method because this is what the market algorithm plays off of. Now, up next is our refined supply and demand zones. Made our way to our hour 1 refined supply or demand zone. What we want to identify is how many times is it playing off of this level? Are we a level 1, a level 2, or a level 3? And these levels are simply found by identifying where the price is continuing its structure. So let's say we had a downtrending market like this, and then you can see price break structure towards the upside, then comes back down. Now price has reached a level 1 demand zone. Now what's important is trying to identify, okay, every single time we continue structure, that's another level. So here, this would be a level 2 demand zone because price clearly continued structure right there. And then if we had price pull back down and continue its structure again, well, now we have a level 3 zone. And anything after level 3 is just going to stay at the same risk because I know that it's showing us more confluences, but also after level 3, you risk exhaustion. And then there starts to become the opportunity of price now using all of these areas as liquidity. So level 3 and above, we want to keep at the same risk. And that will all make sense later once I show you guys the risk side of this. And the final bit to this strategy is identifying, does price create some sort of liquidity before it enters our supply or demand zone? So imagine we had price trending downwards and then we break structure over here, leaving us with a demand zone right over here. Now, before price actually enters this demand zone, what we want to see is price almost enter, then change its direction like this, leaving us with a lot of liquidity resting over here, and then actually sweeping this liquidity before it enters that zone. This is going to be the final piece of the strategy and show us exactly how much we need to risk based on these confluences. And so now I want to show you guys the actual tool that I built to help you with your risk. And as you guys can see over here, this is the OliTrades account flipping risk tool. And I'm going to leave the link to that in the description. So after you guys open that link, you're you're gonna see a button that says calculate risk. If you guys don't see that button, it's probably because you didn't open the link in a browser. Make sure that you open it in a browser. Anyways, you just simply click calculate risk, and it's gonna ask you 4 different questions. It's gonna ask you, are you trading with the trend or against the trend? Are you trading your daily supply or daily demand zone? Yes or no? Which level zone are you in? And was there a liquidity sweep? So just so you guys can see how this works, I'm gonna say trading with trend. I'm gonna say yes, level 2, and yes. So at this point, based on the confluences that I told it, it's gonna tell me how much I should actually be risking. So right now it's telling me to risk 22.5%. Obviously this is not financial advice. I just wanna make that clear, but this is an actual tool that I use for my trading every single day. So now let's dive into the charts and show you guys a couple examples with this to show you how much money you would actually be making using this tool. So now I wanna show you guys this example on USD JPY, which is actually a trade that I ended up taking myself. And so the first thing I'm gonna do is just bring it back to kind of where markets were at the time, right? So let's just bring it back to here. What you guys can see is we had this daily demand zone over here. So already I would go to my bot and I would type in, yes, I am on a daily demand zone. Now from this daily level, you guys can see price comes in and brings itself all the way further up. Now what's important to note is what sort of refined supply zone were we at, right? So let's bring this all the way back to here. If I go down to my hour 4 time frame, I see, okay, my hour 4 refined supply is going to be right over here. I go to my hour 1 and I can see, okay, my hour 1 is going to be this level all the way right here. Now, as you guys can see, price does come all the way down to hour 1 and then continues to break its structure higher. And so now I have a refined break of structure, as you guys can see at this level over here. Now, what's important to do from this point is mark out my new refined hour 1. But since my hour 1 and my hour 4 are the exact same, I'm going to be sticking to my hour 4 time frame on this. I'm going to mark this out straight to the right and set my limits for this zone over here. And now that I have my limits for this zone over here, I want to identify just the moment before it enters the zone. So I would set some sort of alert right above this zone on the chart. Now I'm going to let this play out. Now, as I let this play out, you guys can see this is going to be the area right before we enter the zone. Now, what I want to do is mark out, yes, I do have liquidity resting right around this level here. So now when I go back to my bot, I'm just going to simply input the commands. So in this case, we're trading with the trend. Yes, we have a daily demand or supply zone. We had a level 2 refined, and we did have a liquidity sweep right before entering our zone. Now this is very important. We just simply input those commands, and it's going to tell us final recommendation is 22.5% risk. And now when we bring this back to our chart, you guys can see, let's say I were to risk 22.5% on this trade. I'm going to set my limits at the bottom here, and I'm going to be targeting the higher prices all the way up here. This is going to set up almost for a 1-to-4 risk to reward ratio play. And obviously I can target higher prices all the way up to here, but I always like to find the area where price just fell off. So now you guys can see price taps into our zone and then immediately sprints into profit. Now, just like I showed you guys, this was our refined zone. We might potentially play off of a lower time frame. And this is really how you start to continuously scale and really get the best entries. We already know our hour 1 and our hour 4 were exactly the same. So now we're going to stick to that hour 4, and we can see, okay, our hour 4 just broke structure at this level here. So now this is going to be another one right here. Now we have the same exact setup, except we have a level 3. So now if I go back to the bot and I say trading with trend, daily supply, level 3, and yes to a liquidity sweep, it's going to give me a new set of risk, which now I can scale in on. And now this is 25%. So now I have my first entry, correct, which you guys saw. And then I'll have a potential second entry, which is pretty much at the break-even level of my first entry. So you guys can see this was our first entry over here. And now we have a potential second entry at this level over here, simply because we broke that structure. Now I can set my limits all the way over here. And this one would be playing for a 1 to 5.4 risk to reward ratio. And this one is already pretty much risk-free. As you guys can see, price builds up its liquidity, doesn't tap us in yet, but then also our first order at this point hits our take profit level, and then you guys can see price dumps straight back down to our second order. So at this point, we have a 1 to 3.85 risk to reward ratio. And if you guys do the math on a $100 account, if you were risking the 22.5%, that's $22.5. And so with that risk, you would have already made 86% on your account, because you would have profited $86 because we had a 1 to 3.85 risk to reward ratio trade. And now we've already secured that position, and now we're entered into another position, right? So here you guys can see this would be UJ on a 1 to 4.88 potential risk to reward ratio. And as you guys can see right there, price once again would hit its take profit. And actually on this one, we would be targeting this high over here, as this is the level that it fell from, for a 1 to 5.5 risk to reward ratio. So going on that $100 account, just from these two trades, you would have ended up at $180 after your first trade. And now on this trade, because we had a 25% risk recommended to us, we would have $46.5 risked on this trade. And with the risk to reward ratio, we would have a $255 in profit, meaning that our account just went from $100 to $441 just across these two trades. And that's why I tell you guys, it doesn't mean that we need to take 10 trades every single day. It just means that we have to have the right setups occur in the market so we can act across those. Now, one optional piece to this strategy is is using account deposit bonuses. I've done this with 50% deposit bonuses, with 100% deposit bonuses, and the current broker I'm on has a 250% deposit bonus, meaning that for every $100 I put, they're actually going to give me $250 in credit. So instead of me having to win those first 2 trades to get to that $350 balance, I can actually just deposit 100 and the broker will match it 250% to get me to 350 in credit. And if you guys want that, I'm going to leave the link to that in the description. And so continuing this strategy, here's the next pair that I wanted to look at, right? Let's say we had GBP CAD. You guys can see that price did give us a nice break of structure on the daily towards the downside. Now that's when price actually left this area over here. And you guys can see we cleared all of these lows down here. And now price had pulled back into this area. And now, obviously I could have tried to take a trade off of the daily time frame right here. And if I wanted to input that just on my bot, what I would do is I would input daily trend yes, daily supply yes, level 1, and we did have a liquidity sweep. So at this point, what I'm going to receive is a 20% risk. Now, despite having all these confluences, I personally would not take this trade just because in order for me to wait for the daily to truly sweep all of these lows over here, it's going to take a while just for a 1 to 4 risk to reward ratio. So what I personally would have done is wait for price to enter my daily supply, come back into this area over here, and then go down on my lower time frames. So here I can see, all right, price clearly had a level 1 break of structure on the 4 hour over here. And you guys can see price pulled back down and then came up all the way to a certain time frame that we have to find. Now, this is where the refined supplies come very important. So now let's look at our minute 15. Okay, we can see price at our minute 15 ends up with that supply right there. Price does tap us in. So now if we go to the minute 5 time frame, we have to identify, does price get tapped in to our minute 5 supply? And as you guys can see, our minute 5 supply is the same as the minute 15. And when you have 2 time frames that are the exact same, I always like to use the bigger time frame. So here we had the minute 15 get played into. You guys can see price ran all the way down. And so we had level 1, which was our initial. This would be our level 2. And then now we're looking at a level 3 zone right over here. And here you guys can see price had tapped into it. But just before it taps into it, let's really look at all of our confluences and plug this into our bot. So we had seen price pull back at this area over here and leave this liquidity over here. And right before price actually entered into our zone, once again, it had this liquidity resting over here, meaning that when I go back to my bot, I would plug in trading with trend, daily supply zone, level 3, liquidity sweep yes. And from this point on, it's going to be giving me my exact risk model. And that's going to be a 25% risk. So at this point, I know that based off of this level over here, I could be setting limits for a 25% risk trade. And now if I move this all the way to the right, and like I said, I want to target the lows of the market, which would be this level over here. And as you guys can see, if this does play out, it's going to play out for a 1 to 7.65 risk to reward ratio. And now as I let this play out, you guys can see price does its thing and then eventually hits our take profit right there. So just like that, on a 25% risk, assuming that we won those first 2 trades, and personally over the last 12 months, I've had a 64% win rate. So let's assume that before we won this trade, we lost 1, because out of every 3 trades, I'm very likely to lose 1 of them. That would mean that on a $441 account balance, I risked, let's say 25% on that 1 trade. I'm already putting myself at the maximum risk for that trade, just to show you guys the power of risk when you use this the right way. Now, this would mean that my account would be back to $331. And across that $331, I would be able to risk 25% of that for this 1 trade. So at that point, I would be risking just about $82. And you multiply that by the 7.65 risk to reward ratio across this trade, and you would have a $630 winning trade that would bring your account all the way up to $960. And that's literally just from 4 trades, guys. And I can go on and show you guys examples, but you guys can already see the proof across these trades. And just to put this in perspective for you guys have seen some insane risk to reward ratios across this trade, but across my last account flip, I had an average 1 to 3.89 risk to reward ratio. And that's truly something from my own data. And that data obviously comes from my system, which you guys can learn for free in the description. But averaging a 1 to 3.89 risk to reward ratio across 3 trades a week, it would only take you 5 weeks to turn a $100 account into $100,000. Now, I'm not saying this is going to happen every single time you guys attempt it, but I'm just showing you guys how insane the system is. And I know that the system isn't going to fail you. The only way this fails is if you guys break the rules. And the only reason why I'm so confident in it is because I've done it myself so many times. And to be real with you guys, most of my account flips have come over trading just for 1 week. I've just had the perfect market conditions across that week, and I also traded with a little bit bigger balances. Now, when it comes to my $100 account flips, yes, they do take me a little bit longer. But if you guys want to stay up to date with me in all of my trading outlooks, I'm talking about where I enter, what I'm looking for, and everything in that realm, I'm going to leave the link to my free Telegram in the description. Make sure you guys like, comment, and subscribe if you enjoyed this video, and I'll see y'all in the next one.